Hey everyone, it's Niall at LearnToTradeTheMarket.com. Welcome to today's Forex video newsletter. Today is going to explain the mechanics behind the pin bar reversal with a 50% retracement entry. It's a little twist to the standard pin bar entry. I'm not going to get into all the ways to trade pin bars. I'm going to show you one of them today. I'm also going to show you how to use the horizontal line in your trading, how to plot it on your charts and use it as a confluence or filter for the price action signals. So if we just think about it, we need a filter or a bias in the market. So if we've got a neutral bias, it's usually when the market's trading in between boundaries or support and resistance. In this case, it's a neutral market because we're swinging up and down and we've got these support levels acting very well and these resistance levels acting very well. So we're in a large range at the moment. We've come from 48 to 96 at the low to a high of 61.25, so quite a significant up move from the low. We've hit that resistance and have stalled. Now there's plenty of trading opportunities through this chart, but I'm only going to draw your attention to the most recent one. Yeah, but you could apply this to other setups on this chart or other charts. Now what we're looking for is, first of all, key points in the market. So we can see support and resistance. Very simple and very easy to mark. The second is we're looking for this pin bar that I talk of. It is a candle with a large upper tail or a candle with a large lower tail. It's a very obvious price action signal. There is more advanced ways to trade the pin bar. This is one of them. I won't get too far into it. I'm just going to explain the bare minimum that you need to know to have a look for these on your charts. The pin bar has formed at the high, so let's zoom in and check it out. You can see the pin bar reversal. I'll just circle that. Very obvious from resistance and has confluence of being a sell signal near resistance. So there's two things that are working in our favor. So now to trade off a resistance point after the pin bar is formed, one of the ways that I trade is I look for the pin bar and then I mark the halfway point of that bar. I then wait for the market to move up to that halfway point and I sell short. So we can just have a standing sell limit in the market. I place the stop loss above the high of the bar, above the tail, and then I look for a risk reward target. So if this width here, or the range of the stop, is say 90 points, we will look for at least 180, which is 2 times our risk and preferably more. So we just multiply 90 times 2 gives us a 180 point target. Let's get rid of that and look at the actual setup. We'll zoom into a 4-hour chart and you can see the levels are still marked. This is the beauty of the FX Lite MetaTrader. The charts are clean. We also have that line marked on the chart. No matter what time frame you skip to, it stays there, so that's why I like this platform. But the line at 60.85 is at halfway point. You see the intraday price action moved up towards that level, stalled, and then we moved down, and it's very easy to see the trades made 2 or 3 times what we risked. So there's the 50% retracement entry with the pin bar. So it's not a standard Fibonacci retracement. It's using the daily chart, finding the range of the daily bar, the actual price signal itself, entering at the halfway point, stop above the high, and making a risk reward target to the downside. That's the mechanics of the pin bar 50% entry. If you've got any questions, email me. If you'd like to check out my trading course on the website, check it out, www.learntotradethemarket.com. Hope you enjoyed this video. See you in the next one. Take care and good trading.